Hello everyone, a very good morning, good afternoon, and good evening to all of you. This is your host Vaibhav, and a special hello to Chris King, who wants to have my view on the GBP My friend, we will of course consider the GBP but from the perspective of building an algorithm using the Visual JForex system with the underlying instrument being GBP If you want to have the GBP technical analysis, then you will have to ask the host Rakesh, or you can even consider Mr. Dog, who is expert and who is veteran of almost 40 years. And you can raise your request there, and you will have a fresh view on the developments in the GBP We had a rate cut announcement from the ECB yesterday. Following that, most of the major European currencies have gained ground against the dollar. So GBP is also on the upswing. It has added more than 130 pips from yesterday till now. So I am quite hopeful of the continuation of the bull run. But for more detailed analysis, we will have to watch other sessions. So that's about it. Now we get started for the session with a new fresh start because this is the series involving the RSI. In the prior session, we had first stochastic and afterwards I also demonstrated the algorithm development using simple moving average. Now we will also consider another equally popular, equally interesting indicator, RSI. It is a well-known indicator amongst the traders. It is quite easy to understand. It can be used in a very simple or, for that matter, very complex pattern. Whether you are a novice or a veteran, you are going to find the RSI helpful in revising the entry and exit points for your trade using these oscillator. RSI, which stands for Relative Strength Index, gives you an idea of how strong the momentum is, if it is bullish or bearish, and how bullish or bearish it is. That can also be gauged by the use of this indicator, the simple and equally effective, the RSI, Relative Strength Index. Let me add it for you. You can simply do a quick search to find it. RSI, here it comes. Then there are multiple variants of it as well. We will consider those variants in due course of time. Now that we started session with the GBP analysis, let us use GBP for the analysis for the algorithm development in this session. As I told you beforehand, the RSI is used to measure the momentum. If you take these price action into account over last couple of weeks, you will see that the momentum has shifted gears. Sometimes it is bullish, sometimes it is strongly bullish, sometimes it is bearish, sometimes it is strongly bearish. So all that keeps happening, the changes are there to see, and accordingly you will see those being reflected in the RSI's output as well. We had this strong bull run in the GBP in the second half of August, where we had the RSI continuously hovering close to the upper mark above 50. It most of the time it remained above 50. In classical terms, 50 is the critical marker. If the RSI output is above 50, it is considered the sign of bullishness. If the output is below 50, it is considered the signs of bearishness. And if it is above 70, that is considered strongly bullish, but at the same time the possibility of the overbought underlying instrument being overbought is also there. So you have to read it both ways, that the momentum is strongly bullish, but at the same time, there is the possibility of underlying instrument having seen strong bull run might be nearing the end of the road. It might simply go into a consolidation phase. You also have to be mindful of that. But whatever you do, you simply do not trade against the trend. You try to find the middle ground. You try to find the shift in the momentum. That is the simplest interpretation where we consider anything above 70 to be the zone where you have to keep a keen eye on the underlying instrument's price action. Same applies for the bearishness. As we move along, we will also see that the momentum shifted and eventually the RSI dropped below 50, and at one point in time it was even below 30, where it is considered strongly bearish. Anything below is considered bearish, and anything below 30 is considered strongly bearish. Yesterday we had bearish momentum for the RSI here at this drop when it bottomed at 1.3001. The RSI reading was below 50, and at that point in time, if you had a short sell trade, you would have been in quite a profitable situation. But as I said, it also points that now this might be the end of the road, and in coming hours, in coming period, there might be shift in the momentum. So what happened here is RSI went into the oversold territory that indicated a strongly bearish tendency, but at the same time, the caution was warranted. I'm not saying that you should have gone for a buy trade then and there, but as things stabilized and as the momentum started to shift gradually, we had these RSI hovering below 50, but then picking up pace and eventually crossing above 50. That is where it would have been prudent to change our view from bearish to bullish and start looking for opportunities to go long. And this is the simplest way you can use this RSI indicator. Of course, there are shortcomings as well, and I will now explain the shortcomings of the RSI. Here, let me give you this example. In this, the momentum remains bullish. Here we have this change in the momentum for the underlying instrument, the GBP, where the momentum shifts from bearish to bullish, and it continues to rise till this 1.323 mark, and then again it changes course and starts declining. But prior to the rise, we have this situation here where the momentum is strongly bullish. It at one point in time even crosses above 70. But then what happens is there is this drop in the RSI from the above 70 mark to somewhere close to 50, but it doesn't really decline much. It retains its underlying bullishness, and then it starts to build on that momentum, and there is another leg of bullish move. So if you had applied the logic of the underlying instrument showing the RSI output value above 70, and then after some time if you had gone for the short sell trade you would have suffered loss. So there is also the story where we consider the shortcomings of these RSI. What happens is if the underlying instrument remains strongly bullish, or for that matter strongly bearish, if it is having a strong momentum in either direction, then you will have this reading of the RSI multiple times being above 70, but then you would need other markers to clearly point you in the direction of the possible trend change, because not all the times the trend is going to change. And as I said, many false signals might be generated simply by relying on the RSI output value of about 70, or if the momentum is bearish below 30. So you will have to incorporate this in your trading system, that other markers like the price formation, the price action, like the structure of highs and lows, and the range can also be utilized to take these into account, and not go overboard with the reliance on the RSI output values. I will like to give you a similar example on the bearish side as well. Here, after it changes course, this time around it peaked at 68, just little shy of the 70 mark, and then there was trend change. It started to decline. The momentum went into the bearish territory below 50. Eventually, it crossed below 30 mark, and it remained in the oversold territory for the couple of sessions, and then the momentum picked up again, and we had this consolidation phase where the oscillation of the RSI values kept happening. Sometimes it is in bullish tendency, sometimes it is in bearish tendency. So in the sideways environment, the RSI is not going to be much helpful. It will keep oscillating between the bullishness and bearishness without giving you much clarity on the momentum. So this is also one of the shortcomings, where you can't rely much on the output parameters of the RSI if the underlying instrument is not really moving much. It is neither bullish nor bearish. It's simply consolidating gains or losses seen in the prior bull or bearish run. So there is also one shortcoming which you will have to keep in mind and take into account while devising an algorithm using the RSI. So there are two shortcomings here which I explained to you. One is that the underlying instrument might enter into oversold territory, and still it remains bearish for a while. It doesn't really change course. So that points to the possibility of it being a false signal if you were to simply rely on it being having entered extremities, whether on the bullish side or on the bearish side. So I think the price action is also going to be quite helpful. The other markers, the simple price formation of recent highs and recent lows, is also going to be of critical importance. While dealing with the sideways price action, one will have to look at the lack of momentum on either side, and then devise the system using these RSI as the primary driving factor for the algorithm. In this, we had finally a change happening after the RSI output value dropped below 30, and then it went into a consolidation phase, with finally it marking the momentum shift from bearish to bullish. But not all the time this is going to happen. So there is the crux of the story. There is this wonderful attribute of the RSI, which can be helpful, which can be extremely helpful for us to devise our automatic trading system. But at the same time, for our automatic trading system to work, we will need some kind of noise cancellation filter. We will need to weed out some false signals which are obviously going to be generated whenever the underlying instrument encounters the situation where we know that the RSI is not going to be much helpful. So I have explained to you the advantages as well as the disadvantages of working with the RSI, and all that remains is to give a sound shape, to give a final shape to the algorithm which we will build over next couple of sessions. So for the day, I will stop here. Tomorrow, we will start building on our trading idea. I will give you a simple setup which will be easier to build and which will be easier to also test. It is not going to be a heavy algorithm, so it will be easier to test whenever you want to test it. You can get it tested for the prior record just to make sure that your algorithm is logically sound and it has demonstrated profitability in earlier price action data. So do come back in the next session. We will talk about the RSI more. We will see how we can take it for the algorithm development and turn our trading strategy around, make it profitable using this well-known indicator. Now it's time for me to say goodbye for the day. I'll be back tomorrow with equally interesting development that is going to take place on the Visual JForex platform. Thank you all for joining in. Have a fabulous time ahead. See you next time around. And then goodbye.